Well, hello, everyone, and welcome to another AMIS IFPRI webinar, part of our year-long series. We're ending the year with one on the global oilseed complex. My name is Joe Glauber. I'm a research fellow, a senior research fellow at the International Food Policy Research Institute and acting secretary for AMIS, the Agricultural Market Information System. A lot been going on in global soybean markets. We've seen prices fall considerably from last year's record high, much like we saw across other staples like corn and wheat. Soybean production is likely to hit a record high in 23-24, with global ending stocks projected to rebuild for the second consecutive year. If you look at phenomena like El Nino, we've talked a lot in the last webinar about the impact on rice production. Here's a case where there could be some adverse impacts on things like palm oil production, but by the flip side of that is generally favorable conditions in parts of South America, where, of course, a big soybean producing region. And we'll hear more about all of that in our presentation. You know, in terms of global soybean trade, that continues to be driven by China. China accounts for about 60% of global soybean imports. China's domestic consumption has grown about 4% over the last 10 years. So they've been a huge driver. In the US, we see increased biodiesel production, which has diverted more soybean production to be crushed domestically for soybean oil, thus reducing soybean exports. And as a result, Brazil and other suppliers have seen their market shares grow. In 23-24, Brazil is projected, at least with USDA's numbers, to account for almost 58% of total soybean exports. We have a new government in Argentina, so questions on what, if any, impacts will that mean for Argentine policies and production? And then the continuing war in Ukraine certainly has diverted sunflower oil exports of sunflower seed to crushers in Bulgaria and elsewhere. And so we've seen a transformation of regional patterns. Sunflower oil, Ukraine's a very large producer of that, at least prior to the war, about 50% of the market. And we're And in terms of the global vegetable oil market, they're about 15% or so quite significant. We have a great panel. I'm really pleased Dee Yang, who's an economist at FAO and serves as AMIS's oilseed analyst, is able to join us. We've been wanting to have Dee on for a long time, and so today's his day. We also have Joanna Hitchner, who's the chair of the Interagency Commodity Estimates Committee, the so-called ICEC. She's the chair for the oilseeds subcommittee with the World Agricultural Outlook Board at U.S. Department of Agriculture. Those two will be joined by Darren Cooper, who's the senior grains and oilseed economist and a commodity analyst for the International Grains Council. And then lastly, but certainly not least, is Ramiro Costa, who's the chief economist at the Buenos Aires Grains Exchange. I've given each of these people 12 minutes to present, and then we're going to follow that with a discussion led by Seth Meyer, who's most of you know is USDA's chief economist and currently the chair of AMIS. And so with that, I'm going to turn it over to Dee. Dee, you're on.
Sorry, I just forgot to unmute myself. Thank you, Joe, for the introduction, and good morning, good evening, good afternoon, or good evening, wherever you are. So I understand that today we have actually a very packed program. So without further ado, I would like to just give you some updates of the soybean market from a global perspective. So next slide, please. So this first slide shows some of the latest development in the international soybean prices. So the chart on the left is the IGC soybean spot price index. As you can see, following several months of consecutive declines in early 2023, amid the record harvest in the previous season in Brazil, the price index rebounded in June 2023, mainly underpinned by basically unfavorable weather conditions in major growing regions in the US, and more importantly, by the much lower than expected plantings in the US, as reviewed by the acreage report by the USDA. And this is actually on top of persistent robust domestic demand for soy oil in the US from the biodiesel sector. On the other hand, somewhat sluggish global import demand, particularly from China, coupled with prospects of ample supplies from the southern hemisphere, namely forecasts of another record-breaking harvest in Brazil, and also recovering output in Argentina in the 23-24 season, put some downward pressure on the market, and therefore resulting in lower international soybean prices in the following month until recently, when the excess of hot and dry conditions across major growing states in Brazil raised some concerns over its crop outlook. The chart on the right-hand side shows the CBOT March futures contract. As you can see, the March 2024 contract basically displays a similar trend with the spot price index, but the price levels in recent months are higher than what we observed in June, indicating that the market does put some risk premiums over the crop prospects in South America. Which brings me to the next slide. So in terms of fundamentals, this slide shows the global soybean production in 23-24 season. So in the chart, in the table to the left, you can see that basically now most of the production recovery in 23-24 will hinge on largely hinge on South America. Just as I mentioned, in Argentina, a production recovery would be chiefly yield-driven, supported by favorable weather conditions to date. But in the case of Brazil, the outlook is a bit problematic. While plantings are expected to continue expanding, the yield levels are subject to uncertainties. Basically, protracted drought conditions in the Central West and the northern regions, especially in Mato Grosso state, pose considerable risks over the country's output. While there were some sporadic rainfalls in recent weeks, the short-term weather forecasts remain somewhat worrisome. As shown in the 7-day precipitation anomaly to the right, which I just grabbed from yesterday, the rainfalls across many soybean growing regions in Brazil are still anticipated to remain below the average level. Let's also have a quick look at the northern hemisphere, where harvesting operations just concluded. So production in the US could fall by 3% year-on-year, according to the official WASDE report, while outputs from India is also expected to decline, reflecting below average monsoon rainfalls. By contrast, production in China is seen expanding steadily amid supportive policy measures. But before moving to consumption, it's worth mentioning that despite the uncertain outlook in the southern hemisphere, the global production picture is still largely favorable. At 395 million tons, as we projected as of today, it's more than 20 million tons higher than the previous record highs, leaving quite some room for the downside risks. Next slide. So moving to utilization, after 2 years of stagnation, we expect global soybean consumption to recover in 23-24 season, up about 6% year-on-year, as you can see from the chart on the left. The anticipated growth primarily concentrates in South American countries to meet increasing crush demand for the derived products, namely soy meal and soy oil, for both domestic markets and exports. In particular, for soy oil, the expected expansion also hinges on the prospects of rising biodiesel production. And this is actually also the case for the US, where rising demand for soy oil as a major feedstock to the biodiesel sector is one of the main drivers for soybean crush in the country. As for China, utilization is expected to expand, although at a below average rate, reflecting lingering subdued domestic crush margins, as well as the country's ongoing efforts to reduce soy meal inclusion ratio in the feed rations. The chart to the right shows the profitability level of hog farms in China. Clearly, both large-scale and backyard farms have been suffering from poor margins during the most of times in 2023. and the outlook remains rather subdued, at least in the near future, according to some of the industry experts I spoke with. So this is basically the utilization picture. Next slide, please. So with the global production expected to exceed the consumption, the global carryover stocks in 23-24 are forecast to rebound by nearly 10% year on year. And this is also the recovery for the second consecutive year. Well, also the global stocks to use ratio and the major exporters stock to disappearance ratio would also recover, as you can see from the chart to the left. The chart on the right shows the inventory levels of several major stockholders. As you can see, the carryouts in South American countries, namely Brazil and Argentina, are both forecast to accumulate based on the current production forecast, of course, whereas stocks in China could decline somewhat, releasing the inventories they replenished during the previous season. As for the US, a stock drawdown most likely reflects the lower production estimates of the year. So overall, given the current picture in the production and the utilization, we do expect that the global stocks for soybeans going to be recovered for the second consecutive year in 23-24 season. Next slide, please. So this chart actually shows the global soybean trade for the past few years. And as you can see, the global shipments in 23-24 are forecast to fall slightly below the level reached in 22-23 season. And from the import side, the bulk of the reduction would come from Argentina, being actually a major exporter in normal seasons. The country turned into a net importer in 22-23, the previous season, following its crop failure to fulfill its crushing pipelines. But for the 23-24 season, we do not see that such scenario is likely in the current season. And as you can see in the chart to the right, China is also forecast to import less year on year. This is considering below average consumption growth, as I just mentioned, and also the large soybean stocks it has accumulated in the previous season. Noticeably, the market reports indicates that the country already tried to cover some of its demand in the first quarter of 2024 through U.S. supplies. This is actually considering the potential risks in Brazil that I just mentioned. On the other hand, there are a couple of countries that we do see they will increase their purchase, namely the EU, Egypt, and Vietnam, Thailand, and some other Asian countries. And this is partially thanks to the expected ample global availabilities in the 23-24 season. Moving to the next slide. As for the exporters, this slide shows the sum of the shipments of the major soybean exporters. So shipments from Brazil are expected to continue expanding, keeping the country as the world leading soybean exporter. Of course, this is the magnitude of the export still subject to its its production outcome. Well, the exports from the US may decline following lower production outlook and also subdued export sales. The chart on the right shows the total commitments as of the end of November, which are still lagging behind the pace of the past few years, particularly from China, the bar in blue. And this is even after a rush of purchasing in early November. As you probably already know that China, they did quite some purchase in the early November before the meeting of the two presidents. And the situation in Argentina is very tricky at the moment, since the new administration just took office. There are quite some uncertainties about agriculture and also export policies, as well as the macroeconomic environment. And the farmers are basically holding their crops as a hedge against all these risks for the time being. And I guess the more details will be entertained by our colleagues later. Moving to my last slide. Yes, this is the last slide showing the recap of the global soybean balance. And as I mentioned before, that global production in 23-24 are forecast to expand and reaching potentially a record high of 3,095 million tons. And global utilization is also expected to increase, although at below average rate. And so with this, the global stocks are expected to increase for the second consecutive year in 23-24. While global trade in soybeans are expected to decrease somewhat by nearly 2%. This is considering the subdued outlook in major importers, and also considering that some of the risks for the major exporters. And before closing, I would like also to mention some of the current risks. First of all, on the supply side, the crop development in South America, particularly in Brazil, but also in Argentina, they are under the impact of the ongoing El Nino cycle. And this is one of the major swing factors for to the market for the moment. On the demand side, both protein meal demand from the livestock sector, as well as vegetable oil uptake by the biodiesel producers bear watching. And in addition, there are also some risks regarding GMO policies, as some of you might have known that in some of the Asian countries, in particular Pakistan, they have been suffering from low soybean imports, their feed livestock industry. This is due to the GMO policies that the government is currently reviewing. And also, I would like to point out that in China, recently, there are some safety approvals from the government about 14 new GMO varieties. They are still far from commercialization, but there are some progress making in the country trying to bring the GMO production, and which might increase their production in the long run. So besides, there are some also macroeconomic development risks, and also exchange rate movements, and some also policy initiatives in terms of trade by individual countries. Those could all pose some risks to the market. And finally, I would also like to mention that protracted war in the Ukraine might also add additional certainties to the market, although not through the soybean market directly, but as Joe already mentioned, Ukraine is one of the major sunflower seed producers in the world. And due to that, some of the sunflower oil supplies have been disrupted during the past 2 years, which could have a spillover effect to the soybean market. So with this, I would like to conclude my presentation and get back to you, Joe. Thank you.
Great. Thanks so much, Dee. Let's move on to Joanna.
Thank you, Joe, for having me here, and great presentation, Dee. I'm excited to be here. I'll wait for the PowerPoint to load up. So growth in the renewable diesel industry has been a major story in the United States and has had some big impacts on soybean oil and feedstock trade worldwide. So in this presentation, I will cover the rise in biomass-based diesel in the United States, the changing dynamics of feedstocks used, including soybean oil, and the assumptions that go into forecasting soybean oil for biofuel. So next slide. Thank you. Federal and state mandates, such as California's low carbon fuel standard, have supported the growth in renewable diesel over the past couple of years. And it's important to note that under the federal mandates, the type of feedstock used is not as important, but under California's policies, it provides greater incentives to use feedstocks that are lower carbon intensity, have lower carbon intensity scores like used cooking oil, yellow grease, and tallow over using vegetable oils. And you can see the market for renewable diesel really took off in 21-22, and it was primarily driven by the California market, which has grown tremendously. In 2020, California went from about a quarter of biodiesel and renewable diesel in the diesel fuel pool to over 60% in their last quarterly report. And the soybean oil prices have followed suit. This has supported strong crush margins and incentivized crush capacity expansion announcements in the United States. And it has also separated our soybean oil price from the world price. So next slide. So what has this meant for feedstocks? Okay, so the chart on the left shows feedstocks used in 2022, and 2023 year to date for biodiesel and renewable diesel, which the year to date has almost already surpassed the 2022 level, the year to date through September. And so with the rise of renewable diesel going into California, the share of soybean oil has shifted downward because of the availability of other feedstocks that and California incentivizes. So in 2021, we saw soybean oil have a share of 47%, and that drifted down to 41% year to date, but the pie is expanding. And on the right, you see feedstock imports. We became a magnet for biofuel feedstocks and vegetable oils. The EPA also approved at the end of 2022 canola oil to be used in renewable diesel. So we saw a lot more imports from Canada. And at the same time, we saw more used cooking oil imports from China that may have been diverted from the EU market. So while not all of these imports come in for use in biofuel, they may have other uses. You can just see how the magnitude of those imports, they're about a third of the year-to-date feedstocks used for biofuel. You can see how that magnitude can have an impact on our feedstock market in the United States as those feedstocks enter the United States. So next slide. So how do you forecast how much soybean oil goes into biofuel? Well, there are a few factors, and these are not all inclusive, and it's very tricky. So first, you have to forecast biofuel production. You have to have some sort of RIN balance sheet and assumptions of how much advanced biofuel will cover the conventional category, how much RIN carryover, and then you have to have an assumption for biofuel trade, like how much are we going to export to Canada and to the EU. And then you have to have assumptions about feedstock availability. It's not like corn and ethanol. There's a lot of different feedstocks. We're importing a lot of different feedstocks. So we need to have an assumption for what's available on the market and where soybean oil will fit in that. And then lastly, you need to forecast soybean oil for biofuel, you need a soybean meal balance sheet. So when you crush a soybean, as you all know, about 80% of it is meal and 20% of it is oil. So it's super important to understand the dynamics around the meal market. And when you crush a bean, you don't store the meal for long. So it has to price itself competitively and it has to go somewhere. So with all of that said, in our WASDE forecasts, we encompass ideas around these assumptions. And clearly, other people can have different assumptions than we do. It's a very tricky market and complex market that we're currently in. So next slide. Since 80% of the bean is meal, I want to talk more about meal demand. On the US side, pork and poultry growth is not strong. It's relatively flat. And we're also seeing low prices of competing feed ingredients in the United States. On the right-hand side is our export outstanding sales of meal. They are high now, supported by the fact that Argentina has low supplies. And Argentina is the #1 meal exporter. They export about 90% of the meal that they produce, and they lost half their crop last year. So it's a big wild card. What's going to happen when Argentina rebounds from last year's drought? What happens to US exports of meal early next year and meal prices given all of the extra supplies coming onto the market? So next slide. So here's the soybean oil balance sheet. I know it's a lot of numbers, but I just want to kind of walk through a few. So standing here today, what have we seen it? What has it done and where is it going? As you can see in 22-23, soybean oil for biofuel expanded greatly and exports and stocks shrank to accommodate this growth. So soybean oil for biofuel went from about 10.4 billion pounds to 12.5 billion pounds, while exports went from 1.8 billion pounds to very small. We almost became a net importer. And stocks shrank to pretty tight levels. So going into the out year, into the 23-24 year, we do expect soybean oil for biofuel to continue to grow. But stocks are pretty tight and exports can't shrink much further. So in order to have that growth, we have to see more crush happening in the United States compared to the slight increase that we saw in the prior year. And we expect crush to expand 4% in 23-24, and it's based off of both our assumptions on this soybean meal demand as well as the soybean oil demand. So we have soybean crush going up in the United States, 23-24, as well as soybean exports going down. And while there is this kind of demand pull in the United States for the soybeans to be crushed, we're facing robust competition on the export market with Brazil. Next slide. And I know Dee covered this a little bit, but I wanted to touch upon it quickly. If you look back 5 years ago in 2018-19, the US and Brazil produced nearly the same size crop. Fast forward today, Brazil grew 40 million tons, while world trade grew by less than half of that. So clearly they have a lot of supplies on hand, and they have increased their market share over time, and that definitely may continue. And lastly, the last slide. As Brazil's crops get bigger, the stocks in September, so this is kind of like their mid-year stocks or March stocks in the United States, they'll continue to get larger, potentially competing more with the United States after the US harvest. And currently we're showing stocks increasing about 2 million tons over the prior year, which is pretty large compared to historical stock levels at this time of the year. Next slide. So in summary, biofuel production continues to grow in the United States. It's incentivizing soybean crush expansion and more soybean oil to be used in biofuel. On the soybean meal side, the US is expected to take global market share for soybean meal in the near term. And it is also possible that some importers will switch from importing soybeans to importing more meal. The question remains, what happens when Argentina returns to the market early next year? And we try to reflect that in our forecasts in the WASDE report. And on the soybean side, US is facing stiff competition with Brazil, and we may see export share continue to decline, but at the same time, we're seeing kind of this demand driver at home. So hopefully that answers some of your questions, or maybe spurs some more. I'm happy to answer them here, or you can reach out to me via the email below. Back to you, Joe.
Okay, great. Yeah, so thanks so much. Very interesting. And we're going to be back with you shortly to, I think, even pursue some more here. Very complicated interactions between products, and obviously with various products competing differently globally. So that's going to be a good conversation we're going to have in a couple minutes. But first, we're going to get to a presentation from Darren. Go ahead.
Yeah, thank you, Joe. I'll just wait for the slides to boot up. Okay, thanks, Mabel. Yeah, so let's get into this. So thank you to everyone for the invitation today to address this really interesting and important panel. The title of this is Some Observations on World Markets and Trade. I can't confess to being a global expert on vegetable oils, but certainly my focus is mainly on a day-to-day basis on the oilseeds complex. So what I intend to do today is just to give you a bit of a flavor about vegetable oil markets, what's been happening in recent in the markets in the past 2 years or so, and then actually look at what's driving things from the demand side. So next slide. So really, yeah, borrowing some data from my colleagues at USDA, as we often do. So what we can see here is world consumption by products. So showing the main 4 vegetable oils: palm, soy, rapeseed, canola, sunflower. I mean, it needs very little in terms of an explanation. Consumption has grown by about 40% in the past decade, more than doubling in 20 years. In absolute terms, palm and soy have been key. But the growth is quickest, and this won't be evident from the chart, has been for sunflower oil. And we'll come back to that in a moment. And in terms of consumption by segment, well, food demand is clearly dominant, but as Joanna has really made clear from her presentation on the US perspective, industrial demand, particularly for biofuels, has really been a defining story in recent years. And it's not just in the US. It's also in Brazil. It's also in Asia, in Indonesia, where large volumes of palm are absorbed by that sector. Yeah, I mean, in terms of the past decade, if my calculations are correct, I think growth in that particular segment of the balance sheet has been twice that of food. So really, really important to get a grip on what's happening in the biofuel sector. Next slide, please. But of course, vegetable oils serves both food and industrial sectors. Okay, and so what we're showing you here is which countries are the most important ones, which countries rely on the world market to actually meet their needs. Now, the obvious two countries in the left-hand side of this visual are India and China, big Asian importers of vegetable oils, particularly India. Now, India is a soybean, rapeseed, and partial sunflower seed producer itself, but it relies extensively on the world market, and the supplies heading into India and China, Pakistan, Bangladesh, some other. Just one moment, got a technical issue. Okay, in terms of the supplies heading into those Asian countries, also countries in the Middle East, those are serving the food sector. Okay, in terms of the imports as a share of consumption, that I really think this graphic on the right-hand side of the visual is really worth looking at. You can see that some countries are almost totally reliant on the world market to serve their needs. Okay, in the case of the US, you can see it's right down the bottom of that chart, but it's right close to the top in terms of the aggregate imports. Imports into the US, as Joanna has said, a lot of this has been serving the biofuel sector, particularly canola imports from Canada. So moving to the next slide, please. So just changing the emphasis slightly, just let's have a look at what's happening in vegetable oil markets over the past two years or so. We can see here that prices, they spiked higher in the early stages of 2022. Now, there's no secret about what the reasons were. It was really about the Black Sea conflict, which commenced sort of the very end of February of that year. And what happened then was we saw the effective shutdown of the Ukrainian market for sunflower oil. Ukraine and indeed Russia pretty much dominate that market. They account for about 80% of world trade flows. Also, a similar number for sunflower meal. So the market began to panic. Okay, and this spilled over across the oilseeds complex. It's not just vegetable oils. I think the oilseeds and the high protein meals were high at that time as well. And of course, other factors came into play. Before the 2022-23 season, we had very tight situation in Canada. Canada being not only the biggest exporter of canola, but also canola oil. So that was also a factor. We saw some tightness in the soybean market. So really, we had a cocktail of supportive factors that were pushing up the market, but by far it was the events in the Black Sea region. And from our perspective, we monitor prices on a daily basis, and we were not getting prices out of Ukraine for a period of about 5 months, as you can see in this visual. But we know that if we use Argentina as a proxy for a key origin for which we had prices for sunflower oil, prices at that point around sort of the middle of the year are about $2,000, perhaps $2,400 per ton. So you can just see what the impact was on the sunflower oil markets. So next slide, please. And so just really to develop this point about how important Russia and Ukraine are in this market. So we can see sunflower seed consumption, left-hand side of the visual. Obviously, most of that is processing. And then let's just look at the right-hand side of the visual, and we can see just how important these countries are in terms of sunflower oil trade. It's at least 80% in any given year. One of the reasons I wanted to show this visual is to really underline the fact that what was supporting prices were geopolitical events in the region around that time, because you can see that there is a general upward trend in both of these visuals. So it wasn't really a problem on the supply side. The problem was getting the supplies out of the region. So next slide, please. And really to develop this point a little bit further, just leaving policy aside, so all we're doing here is just showing you some monthly export volumes for sunflower oil out of Ukraine. And we can see that, let me just explain what's going on in this visual. As I say, these are monthly exports out of Ukraine. The red, I've highlighted red, would be the final month of the local marketing year. So that would be in August of each year. So naturally, we would expect quite a big step down in exports out of Ukraine at that time of the year. Now let's spin forward to where we see the onset of the conflict rather, in February of 2022. We see that exports fell off quite considerably. And then in the blue bar, we see the start of the Black Sea Grain Initiative. So that was, I would say, instrumental. Well, it was along with shipments to the European Union across Western borders, which are substantial, probably about half of all sunflower oil exports. The Black Sea Grain Initiative enabled those exporters to move supplies to destinations farther away. So we'll be talking about the Middle East, and particularly the Asian markets, which are really important. Next slide. And no, just really, and just to sort of bring everything together, all I'm showing you here is one of the reasons why prices, not just for veg oils, I've spoken about veg oils here, but really this presentation is looking more at oil seeds as well. We see that supplies across all of the major oilseeds, rapeseed, canola, sunflower seeds, soybeans, and palm oil I've included here, borrowing some data for palm oil from my colleagues at USDA again, because that's not a market that we follow in a great detail. We can see that supplies, net increase in supplies, okay, opening stocks production, have been solidly higher across all of these commodities. So this, the reason I mention this, I'm trying to give a reason why we've seen so much pressure, upward price pressure taken out of the market over the past 2 years. And those supplies, as we're also showing here, have been more than sufficient to deal with rising processing. So next slide, please. Okay, so in this part of the presentation, I want to just kind of build on the excellent story that Joanna gave and just talk a bit more about the demand side for vegetable oils. And what I'm showing you here is global biodiesel, renewable diesel production, okay, on the left-hand side of the visual. And you can see that this is showing really strong growth over the best part of the last 2 decades. The way I like to refer to this chart is if you were for the moment, just ignore the data at the bottom, which is for the European Union, that's the bar in blue, then you almost see a triangle of growth. Okay, what I mean by that is if you look at the series for the US, for Indonesia and Brazil, that is very clearly driving global production of renewable diesel by biodiesel renewable diesel production. Okay, and that's been the big story, as Joanna said, in the US, but also in the US where there's an expanding mandate, which is absorbing soybean oil there. Soybean oil is approximately 70% of total feedstock utilization in Brazil, based on government data. And in Indonesia, it's exclusively palm oil. Again, I'm just borrowing some data here, but really, you know, the chart here really makes that clear. And just on the right-hand side, just to re-emphasize that point, about 80% of total production is due to 4 countries or regions: the EU, the US, Indonesia, and Brazil. Argentina is also a biodiesel producer, and I'm sure my colleague Ramiro may mention that too. But this really is about those 4 countries. So next slide, please. Yeah, and really my apologies to Joanna here, because I've kind of almost replicated one of her visuals. But this is such a big story, what's been happening in the US, that it really does need me to include this. And we, you know, it's already been said that renewable diesel has been, you know, it's really been behind this push to absorb increasing quantities of soybean oil in the US. Biodiesel is kind of plateauing a little bit, so it's really renewable diesel, and this has been boosting US processing to records. So, you know, in the sense that we're expecting US soybean exports to kind of fluctuate in a range that perhaps between 45 and maybe 51 million tons in a season from here on. Domestic demand is what's driving the situation in the US. And from a soybean oil perspective, if you can focus on the bottom right-hand quadrant of this visual, you can see what's going on. Industrial use for biofuels has been on a strong upward, has been showing strong growth in recent years. And it's almost at parity with food use, which has been kind of flatlining for a number of years. But the real story has been what's been happening to exports. The export market has been squeezed out effectively. And as Joanna said, I mean, we're looking at exports of soybean oil out of the US, I think around 150,000 tons. A few years ago, they were, I should say a decade ago, about 1 million. So other exporters, other producers have had to take on the baton and supply the world market. So one of the most interesting aspects of all of this is what I want to show you in the next slide. Next slide, please. And really, this is what it's all about. If you look at the major origins, if you can call the US a major origin at the moment, if you go back maybe to 2020, or prior to that even, you could see that, you know, prices at all of those origins were moved in a kind of a narrow range. You know, occasionally we'd see some differentials, some discounts, premiums, but really you can see that because there has been such demand from the biofuel sector in the US in recent years, we've seen the emergence of this huge premium at times. Only a few months ago, in 2023, that premium was equivalent to $700 per ton. So what do we mean by that? We mean that if you're an importer and you're securing soybean oil out of the US, Gulf basis quotation, then you'd be paying $700 a month a ton more than you would if you went to South America. Now that premium has narrowed more recently, obviously, because we've had the new US crop and processing is expanding. But you know, I think this is probably for us the most interesting aspect of what's been going on in the market. So next slide, please. And you know, if we look at Brazil as well, just as a footnote, this is almost a similar chart to the one I showed you in the US, but there are one or two distinct differences that I want to allude to. First, the first similarity, of course, is that we're seeing biofuels production on an upward trend very clearly. It fell in 2022, but it's expected to go higher in 2023. And this is in some small part, not perhaps as impactful as in the US, but this has been contributing to expanded processing in Brazil. But in terms of soybean oil, local demand versus exports, and Dee referred to this, and Joanna too, in terms of the actual size of the Brazilian crops, they have been so big that they've actually enabled Brazil to support both record domestic demand on the soybean, domestic soybean demand, as well as exports of, you know, close to or above 100 million tons. In terms of soybean oil too, as the US has kind of almost moved out of the market for exports of soybean oil, Brazil has actually been able to fill some of that gap, along with Argentina, the big player. But really, as with the US, you can see the domestic use of soybean oil for biofuels has really been on an upward trend. So next slide, please. And just really, this is my main, my final slide of any substance. And what I'm showing you here is bringing all of this together. So just to explain what's going on the left-hand side of the visual, we're showing the exports of soybean oil for the three major origins. We can see that there's been some large swings in exports out of Argentina, but it's still a dominant player, with exports typically averaging about 5 million tons per year. Sometimes in the past, it's been close to 6 million. Brazil has seen some solid growth in recent years, but of course, you know, because of the needs of the local of local end users for biofuels. We're expecting exports perhaps to fall away in 23, 24, and the US, as Joanna has neatly put, is not really a big player in that market any longer. But in terms of the meal, and this was also touched on previously, this is really interesting because as we know, when you process a bean, you get the meal and the oil, as Joanna mentioned. And so as there's been this pull from the biofuel sector in Brazil, and particularly in the US, it's boosted availabilities of soy meal. And in a year of 22-23, when Argentina had, if I can put it this way, a disastrous season in terms of the soybean crop, which was cut in half, its processing and its availabilities for export of soy meal actually plunged to the extent that Brazilian exports were more or less at parity at about 21-22 million tons. How this pans out, what happens in the future, we don't know. Much will depend on what happens in Argentina 23-24. And also what happens in terms of processing in Brazil. And of course, as Dee mentioned, there are question marks over the Brazilian crop because conditions have not been what I could describe as ideal today, particularly in Mato Grosso. And of course, the US as well. Let's not forget the US exports of soy meal, I think, are forecast at a record in 23-24. So it's really an interesting dynamic here whereby you've got more soybean oil flowing into the domestic sectors in the US and Brazil, which is giving rise to more availabilities for the export market into the soy meal. And I think the next slide, please, final slide. So really, in the interest of time, I won't go through these the summary here because I think I've said most of it already, and I'll just leave these here for future reference and hand back to you, Joe. Thanks so much.
Darren, thanks so much. This was excellent. Again, a lot of grist for future or questions in the next few minutes. But let me remind everyone in the audience that we will follow the next speaker with an extended conversation. And so we want your questions. If you can put them in whatever platform you're watching this on, submit those questions and we'll try to answer them. We have a few in already, and again, we're looking forward to receiving input from you on that. Darren, I'm always struck. I've heard this second time you've disavowed your knowledge of these markets, but I always come away enlightened. So thanks so much.
Joe, I think it's because I'm in such esteemed company. You're making me nervous.
All right. Okay, so let me turn to our last speaker, Ramiro Casas. Please, Ramiro.
Hi, everyone. Thank you, Joe, for having me in this webinar. I'm enthusiastic about participating and sharing the panel with my team and dear colleagues. We'll just wait for...
Go ahead and turn on your camera too, Ramiro.
Oh, yes, sorry. That's okay right now. Okay. Waiting for the slides. Let me know when to start. Well, let's start with... I'm going to talk about Argentina. Thank you very much. As you know, Argentina is the world's leading exporter in soybean oil, soy meal, and the third one in soybeans. And the Argentinian soy industry is one of the most dynamic economic sectors of the country. The future expansion of this industry in the country relies significantly on internal and external policy changes. While external factors do contribute, the industry's evolution is fundamentally contingent on local agricultural policies. Despite the importance of Argentina as one of the world leaders in the soybean market, our ag economy suffers sudden policy changes throughout most of its history. We have a long record of price distorting policies from highly regulated to highly deregulated. In fact, just yesterday, the new government that took office 5 days ago announced and formalized agricultural policies that will bring about significant changes in agricultural crop productions, details of which I will explore further later in this presentation. So next slide, please. Thanks. Let's start with exploring the recent evolution of the planted area, marking out 3 different periods. During the last 23 seasons, we identify patterns in the growth rate of this crop. The first one until 2009, a growth phase with an average annual rate of 6%. However, this growth trend experienced a notable slowdown between 2010 and 2015, increasing at an annual rate of 1.4%. Starting from 2016 season, a significant shift emerged, leading to an annual decrease rate of 1.8. This transformation can be partly attributed to the escalating export duties, which directly contributed to the deceleration in the growth of the soybean value chain. The changes in the agricultural policy resulted in a significant shift in the relative prices dynamics, favoring corn and wheat compared to soybeans. Let's go to the next slide, please. So therefore, the significant decrease in the predominance of soy within the Argentinian agricultural structure is quite evident. During the 2010 season, soybeans occupied 77% of the area dedicated to summer crops and 66% of the total planted area in Argentina. However, as you can see in the graphs, the 2023 season, these proportions are expected to be between 64 and 55 respectively. The policies implemented in this period affected input-output relationships. Therefore, it consequently had an impact on technological adoption. According to the Agricultural Applied Technology Survey of the Buenos Aires Grain Exchange, which contemplate both investment in inputs and also incorporation of management practices, farmers decreased the application of high-tech packages and increased mid and low-tech packages. Please, let's move to the next slide. Thanks. Transitioning from the analysis of the planted area to an examination of production, we observed that the average annual growth of soybeans during 2010 and 2023 was around -2%. However, these trends deepened in 2015. This demonstrates how, from the peak reached in 2015 at 60 million tons, production has fluctuated within the range of 40 to 50 million tons, with the primary factor influencing this variation being the weather. An extreme case occurred in the last season, where the significant decline in production was notable, reaching only 21 million tons. So yes, Darren, it was like a disastrous season. It was one of the worst in our history. So let's talk about the new season, the 23-24. Although we are still on early stages, in fact, Argentinian farmers are still doing field work with almost 60% of the area planted and heading towards the projected total of 17 million hectares. The production estimate is 50 million tons for this new crop season. This is particularly noteworthy during El Niño year, you know, the weather condition Niño, allowing for a positive yield projections per hectares. This number represents an increase of 7% in planted area compared to the past season. And it's really important when we compare the production increase that it's going to be, if the 50 million tons will achieve, of 140% of increase, reaching a total of 30 million additional tons, making the overall estimate at 50 million tons for this new crop season. So let's go to the next one. Let's talk about the reduction of Argentine participation in the world market according to this historical analysis that we are doing right now. The stagnation in soybean production in Argentina has had, of course, significant repercussions on its position within the global market for this crop. Historically, Argentina has, consistently ranked as the world's third largest soybean producer, standing behind Brazil and the United States. However, the challenges mentioned have weakened our global prominence. As you can see in the chart there, from the peak share of 21% during 2008, it has decreased to 12% in the 2022 season. This setback not only highlights Argentina's internal challenges, in terms of its agricultural production, but also indicates a shift in the dynamics of global soybean trade with the greater preponderance of Brazil. In fact, Brazil has seen an increase in its market share, going from 28% in 2008 to 36% in 2022 season. Let's move to the next one, please. Thanks. So the impact on the productive performance of soybeans had its correlation in the crushing and exports. Traditionally in Argentina, 80% of the soybean harvest is locally crushed. However, the average annual growth rate in soybean crushing over the last 10 seasons indicates that Argentina is losing market share. Argentina's market share in global crushing is projected at 12% for the next season, and it is a lower figure than the 19% reached in 2010, according to the information of the USDA. Despite this, Argentina has developed a soybean processing industry that has become a fundamental component of its productive structure. This sector is not only significant in international markets due to its capacity to export soybean oil and soybean meal, but it is also important in creating jobs and generating added value within the national economy in our country, of course. Despite Argentina's positions in soybean processing markets, the country's crushing capacity has consistently exceeded soybean production. On average, of the period from 2015 to 2022, the crushing capacity utilization rate has been 70%. So, like the flip side of this outcome is the potential for recovery that the industry holds if there are shifts in the local incentives and agricultural policies. So let's talk about this, please, in the next slide. Thank you. Having overcome this challenges diagnosis, I would like to highlight some potential good news for Argentinian soybean production. Firstly, the new government could adopt an economic approach that promotes free markets. The removal of barriers to international trade will be announced, and there will be advocacy for a reduction in fiscal pressure, particularly on the most distorting taxes like the export duties. Just yesterday, the government implemented a significant adjustment in the value of the local currency, the peso, reaching to 800 pesos per dollar. This represents a depreciation of the currency by almost 120% in just one day to the other one, significantly enhancing the competitiveness of the exchange rate and reaching values not seen over 2 decades. Furthermore, as you can see there, new regulation for export enhanced the exchange rate to level of 850 pesos per dollar, making an extra improvement of 26% in comparison to the previous agricultural export promotion program. There is even a possibility of increasing cereal export duties by 3 points to partially offset the improves that the new exchange rate gives to farmers. So since the soybean export tax will remain at previous levels, this would imply an improvement in the relative competitiveness of soybeans compared to crops like corn. All of this leads to the consideration that, particularly this year, and given the current situation of prices and cost of production, soybeans may experience even greater benefits in the short term, having gained competitiveness that we're losing in the past few years. Let's move to the next one, please. Okay, so we are at something like a starting line with some big changes coming. The thing is, we don't have the complete picture of where exactly we are headed. Everyone is on the same page. New government said it's high time to focus on the private sector. This involves easing the tax burden and addressing rules that fall short in the competitiveness game. But how fast are the authorities going to face these changes, or what economic tools will be using? Your guess is as good as mine there. It's a bit of uncertainty at this point. So, here's the deal. Shifts are occurring in the Argentine regulatory landscape, and it's crucial to stay updated of these regulatory changes. Anyway, I can provide you with estimates of how soybean production may evolve under reasonable policy changes. As we can see there in the graph, Argentina has high potential for growth in soybean production. If the recently inaugurated government succeeds, and in the event of a shift in the export duty framework, soybean production in Argentina could transition from a nearly stagnant level around 50 million tons, the one that we have the past decade, to a growth of, let's say, a little over 30%, reaching approximately to 70 million tons. These estimations are considering the elasticities and production capacities already available in our country. So let's move to the next one, please, to discuss the midterm outlook for Argentinian production. This is for the whole crops, not just soybean. And this slide shows data from the World and Argentine Agribusiness Reference Scenario to 2033 made by the INAI Foundation. It consists of a long-term outlook of the level of international trade, production, consumption, and export for the main agricultural goods. And for those who frequently use studies generated by other countries or international organisms like the USDA 10-year projections for the food and agricultural sector, this model has a similar methodological approach. So let's talk about the results. Under better policies, the results of our baseline reveal a context of opportunities for Argentina production and exports. Having said this, and considering that under new economic incentives in Argentina will lead to new investments and infrastructure, and of course a higher use of improved technologies at farm level, we can consider that the baseline scenario could be conservative. So for this reason, we also ran a scenario taking this into account. You can see there incentives scenario, where we consider positive shock in logistic cost, and another positive shock in terms of yield gap, filling the yield gap, at least not to the potential, but improving the current situation. So this could be quite optimistic, but it helps us to imagine a potential output and consequently the challenges that we have here to consider which public policies are needed to achieve this goal. So finally, final remarks, and the next slide, I think that is the one with, thank you, yes. After all we have seen, I think my final message is that Argentinian agriculture is important both for the domestic market, but also for the international one. Economic matters, we all know that when Argentinian farmers are given positive incentives, they respond by working harder and increasing total production, using more technology. But the opposite also happens. Our economic history in Argentina is a living lab about this. The current outlook for Argentina's grains and oilseed is highly influenced by two main factors. The first one, the impact of Argentinian potential change in export duties, and the potential stabilization of the economy and return to a stable macroeconomic environment. So finally, the result of the midterm scenario that we were just talking about reveal a context of opportunities. I think that Argentina can improve our competitiveness in terms of logistic and productivity gaps. So maybe we can say I am optimistic about the future if the conditions change a little bit. So with this show, I conclude my presentation. Thank you so much, and I'm back to you.
Great, thanks so much. Okay, so now we are in the Q&A portion. I'm going to ask all of our speakers to put your cameras on, and I will welcome our moderator, Seth Meyer. But before Seth gets to ask that first question, I want to remind everyone, please send in your questions. We have about a half hour here for discussion, and we hope to get to most of them. So Seth, go ahead.
Yeah, thanks, Joe. And again, a big thank you to all the presenters, which always makes it, they cover the ground so well that it makes it tough. You know, I scratched out half the questions that I had thought mentally ahead of time. And one of the things that struck me when we went through these presentations is we talked a lot about supply side expansion or potential. And something else that you mentioned early on kind of struck me, which was China was historically the driver for soybean demand over the last decade. We're talking about 4% demand increases each year, and yet we don't see that, or I don't anticipate that going forward. Can you tell us a little bit about your thoughts about both soybean demand, soybean total, but you've got a sector of maybe tepid meal demand, and what does the oil demand side of this look like? I guess what I'm setting up a question here is we've got a oilseed which produces two products, and it sounds like there's a lot of demand for one, and we're going to be looking for homes for the other, which is the meal. What do you think, Dee?
Thank you, Seth, for the question. So yes, indeed, as we all know that China is still the world #1 soybean importer. They imported more than 60% of the global traded soybeans. But since I think 1819, right? I think since 1819 or 1920, that 9-10% year-on-year increase stopped. That due to some other problems, we have like the trade barriers, some of also the African swine fever, and also in recent years we've been facing this COVID-19 pandemic. And due to all these reasons, we've seen that the Chinese soybean imports they have been stagnating and sometimes even declining a little bit. And so your question is whether this will continue or we still see the Chinese imports to increase. So it's really a difficult call, because for the time being, I think at least for the past 3-4 year seasons, we've seen that the demand of the Chinese has been stagnating due to various reasons that I mentioned. But this is not only due to the problems that I mentioned, but also given for both meal and the oil side. For the meal side, the meal mostly goes to the pork industry as well as poultry and the feed industry. And on those side, it really depends on the profit margins for those livestock sectors. And for the time being, we do not see that the livestock sector, they are going well. They're doing well. So basically, for the time being, we do not see that they are going to resume this 9-10% year-on-year increase. And on the oil side, basically oil, they serve as the food in China, because for the biodiesel sector in China is not still very limited. It's not as big as in the US or Brazil or in the EU. So that side, it really depends on the economic performance, and that which also relates to the per capita food consumption. But during the past few years, most likely amid the COVID-19 pandemic, the consumption on the food side also declined a little bit. But that, I think, with the economic gradually recovering already during the past season, that we do forecast on the food side, the oil side is more or less recovering from the past season. But in the long term, I think it really depends on the economic growth of the country as well as the livestock industry, which is the two of the products of the soybean crushings.
Well, thanks, Dee. I think that AMIS will benefit from you having a colleague that looks at the global vegetable oil complex. I think that AMIS will benefit from that greatly. Darren, I saw your mic come on. I presume you got a question you want to add in. Jump in.
I just wanted to, you can hear me good? Yeah. Okay, I just wanted to add to what Dee said, really. I think, yeah, totally, that I think it's so much more unpredictable, so difficult to forecast China's imports. I mean, we're coming off a year when imports into China expanded by 20% year-on-year, based on our data, which records the shipments from the major origins. And a big story, I wanted to bring the supply side in, a big story was Brazil, because that crop was so huge and so competitively priced. Even now, we're seeing prices out of Brazil, Paranagua, actually below or slightly below US Gulf new crop supplies, which is very unusual for this time of the year. And so China was a big buyer last year. But of course, other things I wanted to mention on the soybean trade side, if you don't mind, of course, and Ramiro can probably tell a better story than me on this, is just how important Argentina was in the last year in terms of buying, what, 10 million tons of soybeans from Paraguay, but also from Brazil, perhaps a little bit from the US. I have to check on that one. So when you're coming to look at 23, 24, it makes everything a lot more uncertain. I think our view is that global trade won't match the 22, 23 number. And I think Dee echoes that from what I saw from his presentation. And a couple of things, I don't think China can be expected to do another year of 105, 110 million tons of imports next year. Argentina, on the back of a better crop, won't be turning to the market for 8 to 10 million tons. And of course, there are question marks about the Brazilian crop. If it's poor by Brazilian standards, then, you know, the prices may not be as competitive. So, yeah, I just wanted to add that, really, to echo what Dee said.
Seth, if you don't mind, let me come in with oh, Ramiro, did you want to say something?
Just to add the number of the imports from Argentina this year, after this tremendous season that we had with the drought, in 2023, imports reached to 9.3 million tons until October, of course. That means that, and those tons came from 5 million tons from Paraguay and 4 from Brazil. So we are expecting that next year, with if everything goes well with the weather, we return to the previous numbers of imports, let's say something like 4 million tons, 4.5, 5 million, but not again numbers like almost 10 million tons. A big increase, almost 100% from one year to the other one. Just that, Joe. Thank you.
Yeah, no, thanks. It's great. I don't want to so much switch topics, but we've had a few questions come in, and they've come in from various parts of the world about soybean production, because as we've talked, the soybean production really has been dominated, I mean, for years, dominated by the US. I mean, if you were to go back 20, 30 years, where the US was the largest exporter and a huge market share, and then this big surge over the last 25, 30 years with Brazil, Argentina, now Paraguay, other countries. What about Africa? What about South Asia as being potential producers of soybeans? What do you see there in terms of trends? And any one of you, or feel free to answer the question.
I can start off. Yeah, in terms of India, I think it's really a question of yields. I think the yield for soybean production in India is about 1 ton per hectare, compared to a global average of what, 2.8, 2.9, with Brazil and the US closer to 3.5. So you can't really expect any substantial gains in South Asia, particularly in India. Bangladesh and Pakistan, the other big players in the soybean market, particularly from an importer side, although we've seen some fall in the last year, they're relying on the world market for everything. So limited potential there for expanded production. And of course, in terms it's a similar story for you to look at rapeseed in South Asia as well. So as I outlined in my presentation, the government is confident to rely on the world market for vegetable oil imports, and is able to secure on average 10 to 15 million tons every year. So yeah, I think it's just a question of yields, and let my colleagues say more on this.
Yes, can I jump in for this?
Sure, please, Dee.
Yes, thank you, Darren, for the comments on India. So I would like to add something about Africa, because I saw there are some questions regarding the production in Africa. So basically, I think besides the climatic conditions in Africa, some of the countries, they may not, such as also the same as India, they are not really as favorable as those other regions. But I think there are also some other limitations in those countries. So first of all, for a lot of the countries, they do have limited how do you say, limited inputs, let's say, not only in terms of seeds, but also in terms of fertilizers, energy, and those are all barriers that could put some limitations on those smallholder producers in Africa. In addition, I think some of the producers, they could also suffered from limited financial resources, not in terms of credit. You know, they do not have like as much as financial resources to run their business. And also some of the limitations may come from the infrastructure side in terms of transportation, storage. Those could all pose some limited constraints on the production. But the good side is in terms of South Africa, some of you might know that during the past years, the production in South Africa, they actually increased from just above 1 million tons to now around 2 or nearly 3 million tons. And they do have some potential, but in terms of magnitude, they are far away from, of course, Brazil or United States. But yes, I think, yes, those are some limitations. And of course, there are some potentials, but they still need some support in terms of policy and in terms of inputs. Thank you.
Great. Seth, turn it back to you.
Well, Joanna, I guess I'm going to pick on you a bit because I think the U.S. is maybe the closest example that I can think of this is, again, when I think about everybody's presentation, we seem to have, you know, you've got two components of the oilseed, and we seem to have, at least in the U.S., switched to really put oil back in the driver's seat in the United States. And that's worked. And we've talked about growing crush margins. So tell me what you think crush margins look like going forward. We saw a lot of crush on paper. Are you expecting that much of that crush to come online? What are we going to do with our meal? We've been fortunate in this last year that Argentina didn't have a crop because they're our big competitor, but Brazil's coming on as well too. What does the global meal market look like for meal? And so I guess in a broader question, maybe as other participants think about this, are we splitting here? Should we be discussing more the difference between meal demand and oil demand at a global level? And are we creating a disconnect?
Hey, Seth, that was like 100 questions all at once. Typical Seth style.
I know you can handle it. I know you can.
So yeah, crush margins have been very good in the United States, supported by oil. Oil share of the crush value has been high. It's supported crush capacity announcements, renewable diesel capacity announcements, and some of that crush capacity has already come online. And some of this crush capacity coming online in this early part of this marketing year are expansions. So we do expect that they will come online. It's not new facilities. And they've already come online, and we had record crush in October. And so going forward, and like I tried to highlight in my presentation, yeah, we could see strong crush margins over the next several months. But what happens when Argentina comes back into the market, providing all of these supplies to the market? It's pretty unclear at this point what the policies and how they will incentivize how much meal goes out, but it doesn't seem at this point like it's prohibiting meal going out of Argentina. Right now they have tight supplies, so that certainly provides opportunity for the United States to export more in the short term. But as Argentina comes online, we may see more pressure on meal prices to price the meal into the export market in order to get some of these continue to crushing at the pace that we need to fulfill this soybean oil demand.
Let me ask a question. You know, we've been largely talking about soybean oil. I know we have Darren brought in rapeseed oil or canola oil and sunflower oil, but let me turn to the other one, the giant in the room in the vegetable oil market, and that's palm. And in particular, what should we expect about El Nino impact on Malaysia and Indonesia? And in particular, is that a timing issue? Is that something that could potentially hit next year rather than this year? You know, Indonesia was a big factor last year in that price run up. in 2022 that we saw, particularly I mean, it's a country that does divert a lot of its palm oil production to biodiesel. We had export restrictions on for roughly 3 weeks, which had very dramatic impacts on prices at the time. I guess what I'm interested in is whether you or anyone else has much feel for Indonesia palm oil production and what that looks like, and if that is something to be concerned about.
I can jump this one off. Yeah, we don't have a 24-25 forecast out yet, but yeah, there are lags in palm production, and we're just kind of now, like, 11, 12 months and 24 months down the road. So it is, it could be a concern. Of course, right now we're just seeing the weather, seeing the actual rainfall that happens. And we have models that kind of see how much of an impact it has been when there's been, dryness in certain months, and its impact later on palm oil production in Malaysia in particular. So it definitely could have an impact on both production in general and markets and vegetable oil prices all around.
Okay, that's great. So something to monitor.
And I think oh, sorry, Dee, do you want to come in first?
No, go ahead.
No, I was just going to say, and just to emphasize just how important it is from the perspective of the other vegetable oils, and particularly from a logistical point of view, that the availability supplies out of the Black Sea region can get to the world market, because a lot of the big Asian importers rely on sunflower oil, particularly India, markets in the Middle East, that would also rely on palm oil. So if there's a supply difficulty on the palm oil side, let's just hope, and it would be sunflower oil, not rapeseed canola oil, sunflower oil, and to some extent soybean oil, that the market would look to. With my non-expertise on palm oil. Yeah.
Sorry, Darren.
Yep.
Can I ask a follow-up on this? And that is on sunflower production, because we did see a decline in sunflower oil production in Ukraine last year, presumably because some of those were in port facilities and things like that. And with more export of the seed itself, is that likely to remain the case for the foreseeable future?
In terms of the composition of the sunflower exports products versus the seed, we're already seeing evidence of a huge decline in sunflower seed exports out of Ukraine. Okay. I think in the first 3 months of the local marketing year that began in September, exports were down by 90% out of Ukraine. So they've almost collapsed.
Okay. So temporary.
But also, I think some of that, don't forget, was the supplies moving across the border into the EU, and there's been restrictions because the countries there were saying it was damaging the local sectors. But the sunflower oil and the meal, which is not restricted, the exports have continued to be robust in the first 3 months of the year out of Ukraine. And what we've also noticed is that based on some of the work that's been done by private analysts, the logistics, the temporary humanitarian corridor we've seen exports of grains and oilseeds across the board ramp up significantly in the recent weeks and the last couple of months. So that is doing, in some way, the job that the Black Sea Grain Initiative did in allowing those supplies to move to markets in Asia away from the European Union. So anyway, I think I've said enough there.
No, thanks so much. Seth?
Yeah, I guess I would follow up just a really quick question. Maybe we can have Ramiro interject a little bit, really, as to how he sees farmers. Give us a little bit more about how he thinks about differential taxation or other factors that may influence the meal oil mix, or if he thinks that that's not on the table here. I know you talked, Ramiro, a lot about farmers' willingness to respond in overall production. Do you think this has much of an influence on product trade?
Yeah, said, for this year, it's like the farmers already have taken the decision of planting, so it's not going to move area, but they are willing to receive good news from the export duties perspective. So they are waiting to have like a reduction, mostly in terms of for the soybean, benefiting soybeans. But it's unclear these days. They just have 5 days at office, and rumors are all over there, and you receive some kind of information, then you receive the opposite one, and it seems like it's not that for sure what they are going to do. To be honest, I didn't hear anything about moving the differentials in terms of the tax for the soybean oil or soybean meal, for instance. Or what we have heard, or what we have heard here is that if they increase export tax in order to offset the new exchange rate that we mentioned before, it's going to be to increase to 15% this tax for all over the economy. But for crops that they already are paying 12%, like corn, like wheat, it's going to be an increase of only 3 points. Because they are already paying 12, they are going to 15, they have to increase in 3 points. For the case of soybean, that is paying 33%, and it's clearly above this 15%, it's going to be there, it's not going to change. So in relative terms, it's going to be like a relative improvement for soybean farmers, because they are going to be better than the ones that they are willing to produce corn, let's say. So I'm sorry I don't have a better answer for you and for the people here hearing, but I think that we have to follow this very closely because news are already there, and we have to follow it closely. Just that.
Okay. We're almost out of time. Joanne, I would like to come back to you on biodiesel growth in general. And I know this is a very complicated picture. I did look at the 10-year baseline numbers that just came out, at least in terms of the U.S. soybean oil exports and soybean and crush numbers and biodiesel use. And they actually slow a lot. And so having watched a lot of baselines and oversaw a lot of baselines when I was at USDA, I know we chronically underestimated China import demand for years. Always in our baselines, it was growing far faster than a lot of analysts were thinking. Is the thing holding back? Presumably biodiesel production continues. The question is what the feedstock is. Is that the issue? And because of the fact that the meal itself also has to find a home, that soybeans may not be the attractive option relative to cooking oil. Is that part of the question issue here as we look out over the next 5-10 years?
Yeah. So one thing I want to point out with our baseline, it is policy in place. So basically it takes what we know in policy 23 through 25 mandates, and it just extends the 25 out. So since the policy is not growing, we don't assume that biofuel is going to be growing. And that's last year when we did the baseline, we only had 2022 levels. So that's why our baselines comparatively have actually moved up, because then we took into account the new RVO levels that were published by EPA. Yeah, I mean, it is in terms of your question, in the near term, in the next 3 years, like where does soybean oil fit into it? We try to, take into account the availability of competing feedstocks on the world market, which is a difficult thing to assess. I think on the canola oil side, there's some sort of limit because Canada can only produce so much. We started importing from Canada, like we typically had imported in 2021, like 50 to 60% of Canada's canola oil. Now that shot up to like 90%. So that kind of has a ceiling of how much that can grow and export to us, depending on their crush and their availability. But the availability of other feedstocks, like used cooking and oil and tallow, I mean, we've seen it's come in higher than expected into the United States. And I think that, prices have really incentivized the imports of those. So the availability of that, both domestically and on the international market, I think will kind of come to see in fruition as the biodiesel continues to expand. And then, as we mentioned on the soybean meal side, it also dictates the availability of how much soybean oil you have available. I mean, you crush the bean and you crush it for money for both the meal and oil side. So if meal has to price itself competitively and crush margins come down, so we'll see the intricate dynamics of that, particularly as Argentina comes back into the market early next year.
Great.
Yeah.
Okay. Any other further comments to any of this? So I'm going to wrap it up. I know Seth is already, I think, en route to a briefing he has to give. I just want to really thank all of our panelists. This was very, very interesting in a very complicated market in one sense, given the fact that we have these various products and competing with various suppliers and very different demands across the world. Anyway, thanks so much to Dee, Joanna, and Darren and Ramiro. We'll be calling on you often, I think, over the next few years as we further, as AMIS gets further along on this. We hope to have a vegetable oil analyst on board very, very soon, within the next month or two, hopefully. This is going to be an area that we're very much interested in. Thanks so much to the IFPRI production team has put the webinar together. And with that, let me sign off.